Welcome to the Trading Lounge and the day ahead report, and here we're looking at the S&P 500, and the Dow Jones made a new high last night, but the S&P 500 struggled to do that. The US dollar broke down through the 80, which is the main driver, pushing stocks and commodities and currencies to the upside. However, that move through the 80 will have a retest at some stage. But the main news that we need to be sort of waiting for really is the Fed's meeting, which is tomorrow at 4 a.m. and a press conference at 4:15. So will they print money? Will they do this? Will they do that? Who knows? But what we're looking for here in the wave count here, we have been looking for our 5-wave structure to the upside. And even though this hasn't made a new high here, what we could be seeing here is a more complicated wave 4 in terms of an A and a B and a C, and then a push to the upside. That's possible. Or we could have a failed 5th wave here, or the news may create that 5th wave here if it's positive tomorrow. But either way, after we get a 5-wave structure like this, we'll either have a top in place, or we're going to see an A and a B and a C correction, and then another move even higher. So this 5-wave structure here could be the top, or it could be the beginning of a next move up. So we just need to be a little bit patient over the next 4 or 5 days really, or unless we get a really clean move from the Feds, because if this move if they don't do anything and the market comes down through here and takes out the top of wave 1 here at 1410, then we really have a breaking down of the structure to the upside there. Just sort of breaking that down a little bit further. This is this is it just on the 1-hour chart here. Just sort of looking for really this 5th wave up here. Yesterday we were looking for a 38.2 retracement level in terms of an A and a B and a C here, and as long as it stayed above the 420 there, we were quite happy with that, because that's the pivot within group 1, the 10, 20 and 30. But as you can see also too here, on a bit of a positive note, it's actually just winding across the 430 here, which is important, because it's the top of group 1 here. So let's just sort of see how that goes. But while the market really stays above the 1420, then it's positive. It's the same with the Dow Jones actually as well, because with the Dow Jones here on this daily chart here, we've had this retest of 13,000. So to me, it's this means to me is a real positive move now. And for me, it's just really, or according to the trading level thing, is that this is a positive. This is a positive thing here, and the next positive step would be the group 1 to find support, which would be this 13,300 here as a support. But once again, we've been tracking these 5 little waves up here, and yes, we'll drill into that. And yes, I do grant that there's different ways to actually count this, but I think this is a reasonable way to count this one here as well, in terms that allowing for another move to the upside. So we've got the bracket 1 here, bracket 2 here, and then we've got 1, 2, and the whole 3rd wave here, and the 4th wave here to make the 5th of the 3rd. So we still could get another 4th and another 5th up through here. So that's possible as well. But what really interests me is that we do have this impulse wave, whichever way you look at it, and this minor group 1, in this case the 100, 200 and 300 here. So we can expect, this is the normal trading levels pattern going across here, what I call the classic pattern, where it's got the arrival, the reaction, finding support, creating the first high above the level, and then we get the A, the B and the C correction coming down, and it can spike down below the 1320 here, 13,200, but long as it pops back up through there, would be fine. So let's just see what eventuates through here. If we do see a corrective pattern in this space here, then we know we're going to make new highs once again. But the Feds will be the real driver tomorrow on that, and it would probably move sharp in either way. So the idea of trading less or being less exposed tomorrow, today, would be the would be a reasonable choice. So, but look, anyway, that's what we're sort of looking at. So we're not really seeing any breakdown in price structure to the upside. And it's the same for the European market as well. You know that the DAX is following the US markets, where the FTSE's got its own little thing sort of happening. But once again, we've got a little 5-wave structure moving up through here now at the 73. But the 7,300 is also a group 1 as well from the 7,000. So we will see a corrective pattern within this space as well. But once again, we've got that 5 waves there. What we want to see now is either a total breakdown of this and creating a top, or we're going to see a corrective pattern in through here. If we do see the corrective pattern in through here, which can pull back the 61.8% from the 5-wave structure here, so we can see it back down through here. It will just be interesting to see what happens, because at the 7,000, if that was the case, if we did see this breakdown through here, then this would be the first high, which is normally in 5 waves anyway, above the 7,000 level there, and we'll see a larger correction unfold from that point there. So yeah, we just got to be a little bit sort of careful. You know, we knew we had the 5 waves going up, and that's sort of completed now, and the FTSE is slightly different as well, but as I mentioned here over the last couple of days, the 5,800 minor trading level 8, a profit taking number. There's going to be a lot of orders sitting there, because it's, you know, it's just an even number. So while the price is under this, you can't go long from here. But this is just going to follow what the S&P 500 is doing. But because it hasn't made new highs here, then it makes it like the DAX did. Then it makes itself open to being called a weaker market. So if you're going to be trading short, well, then this is the market that you'd be looking for if the news was down. So setting orders on this rather than the DAX would be the go. Our market, the cash market here, with the following the SPY in the overnight market, the price action we're looking for here is that we're looking for a wave 4 to unfold here. Now, as I've mentioned before, the wave 4 can be down to here and completed here, but it just appears that this is just the first leg of it through here, and it does appear to be in 5 waves here when we do look at the cash market. But the futures market and the SPY, the CFD cash, has it also as a corrective wave in 3 waves, so an A, B, C. But this whole pattern through here is just is corrective. So just drilling into, you know, we've had this move down through here, so this can be counted as corrective or impulsive on the actual XJO, and this move up through here, it does count positive to this point here, but this structure here is counting corrective as well. And I was sort of looking at it in terms, now that it's developed a little bit further, is so we've got this impulse wave down through here. So I was considering that an A wave, and then a small A, a B wave in 3 waves, and a C wave through to here for a B wave, and then a C wave down through here. So we just need to be a bit careful. You wouldn't go long on this until you had 43.50 as support, so that's something that you'd look for. You know that even if you did go long there, you'd want to keep the position sizing small, because you'd be running into these old highs here in the subgroup 2 area here. But if you did scale in here and were fortunate enough for the market to move up, then you'd be adding on the 43.70 there, because we'd be looking at the 4,500 if this was going to move higher, as this whole correction across the 43 being a wave 4 there. So look, at the moment I don't really see any trend possibilities coming from here just yet. It's I just feel it's a little bit more incomplete. We got Westpac sentiment figures coming out today. We had the NAB yesterday, I think it was, and they were positive, but the sentiment was down. So it's expected to be down as well. So we should see a bit of a softer situation here as well. So nothing really coming from here. Let's have a look at the commodities. Okay, the US dollar index here, as you can see, has moved through the 80. We'll have a closer look at this with the Australian dollar, but essentially we're looking at this five-wave structure moving down through here, and it's moved down. It's still got further to go down through here, but this moving down through here obviously will give strength to the commodities. However, gold didn't really push up that much here. When we're looking at gold here on the 1 hour chart here, yes, it did move up, but not as swiftly as you would expect. But however, we're looking for, with gold here, we're looking the 1730 here, as 1730 here is the top of subgroup 1, so 10, 20, 30. So it is developing support on there. However, I just wanted to point out that from this little structure here on the 1 hour chart, the 1, the 2, the 3, the wave 4 here, the wave 4 pulling back, it can pull back 38.2%, which is a 1720 here. So just be a little bit mindful that this move here can be an A and a B and a C wave back into here first, and then up for the fifth wave. So just be a little bit mindful of that. If that was going to push straight up there, that would have done that with the US dollar index pushing to the downside, but it was reluctant to move up there. So we just got to consider another five little wave structure down through here as an A and a B and a C here, and then finding support there. So be a little bit careful about that. If it makes support on top of this little area here, so to speak, then you can go along from that point and look to go up to the 1750. Otherwise, we'll be looking to come back to here first and then move to the upside. Silver's much the same as well. I've just got a better. Just bear with me for a second. Just have a. Okay, this is the one I was looking for. So because with silver here, we've got this move through here, which that ABC there, it's good having that, because then you know that the whole pattern is corrective. It still might be a B wave and a C wave here, or this may be up for 1 and back for 2. It's a little bit tricky for me to see that, but the pattern is corrective, and yes, it can come back lower through here, but then it should move up after that as well. So the gold will be in the same line with that. The copper market is chuffing to the upside, but you can see now that obviously this was the building process through here, and this is the middle of the trend here. So we're sort of looking towards not so much the end of it, but yeah, in this structure to the end. So we were looking at, from here we were looking at 1, 2, 3, 4, 5. So, and from this one here we were looking for the 1, the 2. So this is probably the top of the third here now. So we'll see a fourth wave across the 72, and then a fifth wave up to the 80. But the fifth wave won't be long, because the extension was in the third wave here as such. So the wave 1 here and wave 5 will be about the same distance there. But still, it's all creeping up quite nicely. So that's a positive. The oil market, it can be viewed in a couple of different ways. If you're looking at it in the triangle pattern, then we can still have another move down to retest of 95 before we see a move up. Obviously, this is going to be driven by the news tomorrow as well, and there is resistance up here, but finding support, which is traded above the 96.50, which is important, but it hasn't really solidly retested. It's had a little sort of retest before it's gone up to the next level there, 97, but it hasn't really tested it, so that's what it's likely to do next. So just be aware that we can get this move down through here and a move up before we see that move up through there. But this is a corrective pattern through here, so we are expecting it to see it higher. So a corrective pattern is a continuation pattern. So we've got the move up through here, and this is a corrective pattern, a continuation pattern. So once it's complete, then it will move to the upside. So a bit of patience there. Let's have a look at currencies, as the Australian dollar is moving quite strongly. Okay, the US dollar here is obviously trending to the downside, and this is supporting commodities and other dollars, and also indices as well. We are looking at wave 4 here down to wave 5 for wave 3. This little wave structure is not finished yet. We'll drill into that in a moment. Once that's complete, we'll see a rally back into here as a wave 4, and then another wave 5 down, which can take us down to the 78 or 77 sort of area through there. So just tracking this little wave structure in here. But the main point here is that it's got this bearish connotations to it, so it'll be supporting the other market. So we are looking from this point here, the down for one, back for two, the third wave down, the fourth wave, and the fifth wave unfolding here. This fifth wave here, it may be completed. I'm just not sure. We'll have a little bit of a look at that, because we can count 5 waves down in terms of 1, 2, 3, 4, and 5 be moving down through here. Maybe it'll push down through here. Or we could also look at this too as a structure that's still unfolding in terms of down for wave 1, back for wave 2 of 1 degree, and then this just being the third wave down in terms of down for 1, back for 2, down for 3. But what we will see here, whichever way we go here, is that we'll see a retest of the 80 or even the 80-10 here, because the 80-10 here seems to be the support level through here, more so than the 80 here. So the 80 hasn't had time to sort of settle in just yet. We can get a bounce back from subgroup 2 here. And also, if we don't get it there, we may get it from the 79.50, but we also could get it as low as down here somewhere as well. So it just hasn't occurred yet. So we just need a little bit more time to have a look at that. But this does appear to be the third wave here, so we should expect further downside to come there. The euro. Obviously the opposite, so seeing the US dollar further down at 77 would see this market move to the upside further, and we're looking at this particular pattern through here, not changing our weekly outlook for this market, but certainly sort of adding this corrective bounce in through here. So that corrective bounce we were looking at yesterday as well, and we were looking for this first bounce in the structure there as the wave A, and within this wave A here we're looking at 5 waves moving up through here. So as you can see, they're still unfolding through there, so we'll be tracking those through there. The 130 is obviously going to be a resistance there, and when this comes up to the 130, it's obviously going to come back to the 129, even the 128 here because of the support here. So it's going to be a fair bit of movement in all of this here. But just drilling down into this a little bit further through here, as we were doing yesterday. I think yesterday we were looking for the reaction at the 128 as a wave 4, and then a push up for the wave 5, which that's obviously pushing up through there now. That'll be wave 5 of 5 of 3, and then we'll see another wave 4 come back. So we haven't really seen the corrective pattern across the 128 just yet. We're only seeing the first high above the level in the classic patterns, the arrival, the reaction, the support, the first high above the level, then the ABC correction once that's finished, finding support, and then moving up to the next level there. But of course this is going to be headline driven for whatever the Feds do tomorrow at 4 a.m. there. And just drilling down into this a little bit closer here, just a little bit like the US dollar here as well. So we can count the 5 waves up through here like we can on the US dollar as well. But this last little structure here is do we have the high in here now, or do we have up for wave 1 and back for wave 2? In fact, up for 1, back for 2, up for 1, back for 2, and moving higher up into the 129 there. So looking at just drilling down into that a little bit further, and that's what I meant there, the up for wave 1 and back for wave 2 of 1 degree, and then the third wave unfolding up here with up for 1, ABC, back for 2. This would be probably the third wave here. Probably even a bit more to that actually. So look, it can push higher through here. So this particular move here, the retracement level would be back into 38.2, back into this area through here at tops, the 128.30. So just allow that to unfold into that point there, and see how it develops support after that through there. If it just moves straight up from here and finds support on top of the 72, well, then you'd go from that point there. But just be aware it will be headline driven tomorrow, in terms of probably even buy the rumour, sell the fact as normal. any stimulus that does come in, any sort of secondary bond buying, printing money, basically will push it up for the short term. But each time they've done that, it's the market has rolled over. So we need to be mindful of that as well. So it just depends if they're going to print money or not. There's other things that they can do. If they will do those, who knows? So it's always a good idea to trade less when markets are driven by news, or unless you set the orders up in front of the market, which is also a good idea as well. The Australian market here is where this triangle pattern that we're looking at through here. One of the things that we're looking at here yesterday is that we had this label down here as a 5-wave structure, but it's not the case. And because the market's pushed up here now and taken out the low of that little move there, that means we've got overlapping wave structure. So we have to label it like this now. So in terms of an A and a B and a C. Now what we don't know is we don't know if this is going to be an ABC for the A wave, up for the B wave, which can go up to the 105 because that's what it's basically retesting, and then 5 waves down for wave C to make the C of E or wave 4 here. So that's a possibility, but we also need to understand too that this could also be the finish of wave 4 here, because it does fit the price. The price movement back down through here has pulled back down to probably a minimum requirement, but it has pulled back in 3 waves, and we are starting to see an impulse wave to the upside. So we may have to label that as the completion of the triangle there. We'll know that in due course. But as I mentioned the other day too, that the 105, if the 105 becomes the support, then we've got a bullish structure. The bias would be to the bullish side at that stage there, and you'd also have that price to work off as well, and would be looking for higher ground up at the 110 there. In fact, taking out the all-time highs if the pattern is right. So just drilling down into that a little bit here. On our charts, we've labelled this as an A and a B and a C wave coming up to here, which can be right, but we can also label it in a 5-wave structure, as I have labelled it here as well, in terms of the 1 and the 2. I know that's a little bit small, but it's the same as an expanded flat pattern, and it's very much the same as when our market was down. Down around the sort of 50-cent mark along quite some time ago. Same sort of pattern there as well. But a larger one, of course. So we can also label it like this here. So what we can do it for the interim here, even if this is a wave C up here, both of these structures will have 5 waves in them. You can obviously see here that there's a resistance line through here, which is sort of pegging it there a little bit. But yes, we're looking for 5 waves in this structure here, and that's what's been on the chart. So when we sort of drill in there, that's the same chart basically. So yeah, so that's it there. We'll have a better chart here on that. Okay, yeah. So just bear with me for a second here. So in this last leg up here, we're looking for wave 1, wave 2, and I was just labelling it in this case here in terms of up for 1, back for 2, and then looking for 5 waves in here for wave 3 and wave 4 to pull back. Wave 4 can pull back to the 104.10 here, the 38.2 retracement, so as a wave 4. So just be mindful of that situation there. That's let me just have a look at this. It's still early days here yet, but yeah, so just allow this to unfold through here, and if it does come down through to here and then comes back up and finds support on the 104.30, the top of group 1, well then you can move in from that point. So it is handy if it does come back down and spike down through here and then find support up there, because it's tested lower then, check the demand and it's there, and then it finds support, and the support gives you a price point to work from, and then you know where to place the stops from that point. And then looking to take out these highs up through here. Yes, a nice strong move through there, as you can see, and the US dollar would also be continuing to move to the downside. So keep an eye on that, on those levels and wave counts there as well. So the stock market, in terms of trading our robo trades, is that you can see that yes, the Dow had made new highs, which is a positive. The S&P 500 didn't, so the advanced decline ratio would be struggling at that point. So we just need to be careful in what trades we put out. Plus, because there's that sort of softness in there, that's why I didn't put out many yesterday. I think just one. So and also the Westpac sentiment today too will be a softer thing, and then we've got the Fed's meeting as well. So it is a time to sort of to reduce and go into sort of protection mode a little bit. And even if the markets do race off tomorrow, they could race up or they could race down. So it's better to be safe than sorry. And no need to say woulda, coulda, shoulda, and all that as well, because there's a time to trade, and that's at nice safe points. And there's a time to be patient and withdraw somewhat there, because losses are fine, but the main problem with losses is that the recovery time is always a little bit longer than one would expect. So, alrighty, well, good morning and good luck.